Morning all. How you doing? Sorry, I'm a bit late this morning. Bear with me 1 second. I'm just trying to set up an EA, a set file for the EA quickly on my E8 account. Let's do that and that. So I just got to find the sets. That one is there and here. Okay. What's the time? 5:02. That's cool. Bear with me 1 second. I will be with you in a minute. I'm really unorganized this morning. 10, 5, and do that one. That's it. 11:30. We are taking 1 and 2. So I've just got some set files that I've been fine tuning, and I just want to get them live on my E8 funded account this morning. Trade distance is 450, so we're using a trailer. Be 4,500 on E8. Break even would be 2,500. Not using a moving average. Are we adding 2 winners? I can't remember. Nope. Okay. So that will be DAX free market 200. Okay. Sorry, I'm with you. Morning, Stevie. Morning, Jacob. Morning, Ladder. I just want to quickly monitor these. I'll be able to monitor them on my EA account, which is on my other window. If I can get the DAX up. That's gold. There's the DAX. Cool. Right, I'm with you. Right. How is everybody? What a busy day yesterday was. Obviously, everything went completely tonto and nuts yesterday with the news from the US. So US tanked, all the indices skyrocketed, all the indices undid their moves pretty much, as you can see. So the DAX undid the spike, the NASDAQ undid it, the Dow undid it and dropped a bit, and the S&P undid it as well. So, and the FTSE did as well, if you're interested in the FTSE. So yeah, everything moved yesterday. I've turned the EA off on this account because really volatile at the moment. Well, I say it's really volatile. The openings are very whippy at the minute. So I'm not going to trade anything this side of Christmas anymore. Not even scalping, not on the funded accounts, not on anything. I've got a couple running on an EA account, and I'm going to run this EA on the other EA account this morning, but with reduced risk because it's all a bit crazy at the minute, isn't it? So yeah, so we had the rate announcements yesterday. They were all negatives across the board, monthly, yearly, core, everything negative. So obviously the US dropped dramatically on that. We've had the CPI figures this morning for the pound, which all came out negative. So shorts on the pound potentially today as well. And obviously news today is all about FOMC later on. We've got GDP for the New Zealand dollar as well. So it's a busy old day today. So the CPI figures haven't done much to the pound this morning. So I've got another simulation running on that one. So far this morning, the pound has not really gone very far at all off of the news. We had an initial drop, which is all pulling back now at the open. So it looks like the pound, again, yeah, negative news. Let's power up the pound. Nothing's really working at all in any shape or form at the minute. Everything's all over the place. So hence me, I can't be bothered with it at the minute. If they're going to muck about to this extent, let them do it. I've made my money this year. I'll just give it up and start again in January. my kind of opinion at the minute. There's a lot of volatility, obviously, but you know, it is literally flip a coin on direction. It doesn't matter what the fundamentals are, it will go where it wants. Doesn't matter what the news is, it will go where it fancies. It goes sideways and then explodes for no reason whatsoever and stops. You know, the whole market, every instrument at the moment is all over the place. So it's too difficult to trade. I'm just getting chopped around a lot on the low time frames, and obviously I'm not position trading at the moment, so I've decided to call it a day. But yeah, so yeah, negative news on the pound. So obviously London Open, it's deciding to pump. You know, just nothing's making any sense, is it? Jesus, what's that all about? DAX has gone completely crazy. Wow. That was a big flow. Did you see that? Just a huge spike on the open there. Missed my sell limit. That's interesting. So I've got a pre-market version running. Oh my God, that screen's massive. Just reduce this down so it actually fits on the screen. So that's just basically tried to trade short on the pre-market. So this set file that you just saw me putting live on the EA, it takes the first 3 candles before the open and forms a range on the, which is what I call the pre-market breakout range. I've had really good results off of testing this 15 minutes before the market opened and the break on the open. That's where it was. That you saw that spike down happened. It didn't manage to get the order on in time. This moved down before the EA was actually able to place the order. So I'm going to get triggered on a sell limit on that if it pushes back up again. But if not, I've missed it, which is very annoying. But the EA is also going to trade the normal 5-minute opening range as well. So I will get an extra position on down there. That's interesting. I haven't seen volatility like that at the open before either. So that's another anomaly. It's just a nightmare at the minute. Everything's just nuts, isn't it? But anyway. So we'll see how that goes. It's just coming up to trigger my limit. There we go. My limit orders. Why is it not triggering? Closed due to stop loss price. 144.44 and 144.450. Sorry, bear with me a second. What the hell is going on with that? Why is that stop loss so tight? Sorry, I just need to check this. This is the first time live testing the set file. So that's set a 200 pip stop. Oh, here we go. Should be 2000. Okay, I need to cancel that off. Oh my God. That's going to hurt if that comes down. That's an $800 loss. Please push. This is why you do demo testing, guys. That just cost me $800. This is part of the problem with different brokers, right? So on Axie, I need to enter that as a 20 and that there as a 40. On Robo Forex, I need to enter that as a 400 and that as a 200. Sorry, not that one. That one is a 200. On E8, I need to enter it as a 2,000 and a 4,000. The difference between one digit will cost you the difference between an £80 loss and an £800 loss, which you just saw there. So be warned. Good job I had a good day yesterday, but that didn't help. That's not helping me this morning. Yeah, be careful of that. There's nothing I can really do about this. This is just the way that brokers change their digits. So meh. My God, what a nightmare. Okay. Okay, live on air. Cock up with an EA. Brilliant. Right, so let's pretend that didn't happen. There's your opening range this morning. I didn't get a chance. I rushed this. That was God, what an absolute prick. Sorry. It's just cost me an absolute fortune. I should have demo tested it this morning. I didn't. I should have just gone in with $1. It's because I was rushing to set it up this morning, but never mind. Right, so there's your opening range. Obviously breaks to the highs or the lows. Not that it matters to me, because I'm not going to trade it this morning, because I'm not going to let that run with an $800 loss this morning. Anyway, so let's carry on. That's right, it put me off this morning. So news today, obviously FOMC later. We've got GDP for the New Zealand dollar, and then obviously Aussie dollar tomorrow morning. We've got unemployment rates. So from 7:30 tonight all the way through till before we wake up tomorrow morning, for the SMB rates at 8:30, we've got loads and loads and loads of news. So the rates yesterday were negative on the US dollar. Sorry, the interest rate. Yeah, the interest rates were negative. Inflation numbers were negative yesterday on the US dollar. Today we've got obviously the refinancing rate, basically interest rate figures coming out. Forecast is 4.5. As we had negative figures there yesterday, that takes the pressure off the Fed for an increase of 0.75. So there was talk about a 0.75 increase, which is what we've had recently. So you can see we went from 1 to 175, 175 to 25, 25, 325, 325, 4, 4, 4.75. It would be the norm. Okay, so what the Fed's decided to do is, in the anticipation of inflation being lower, they've gone with a 4.5 forecast. The market was sitting there thinking might be 4.75 still. All depends what happens with these numbers. So now these numbers have come out as negative, i.e. inflation is dropping. Interest rates don't have to have as much pressure on them. Therefore, we might well see those being as expected today. Possibly lower. You never know. But if we get them lower, it will be negative US. If we get them as expected, off the back of that, it could also be negative US. So it's very difficult to tell today what we're going to get. But obviously the market reacted negatively to the US yesterday. So we had a big drop on that one, as we know. And basically the expectation moving forward will be for everything to start to gradually drop on the US. There's obviously a lot of other figures that go into making up fundamentals. We've got the unemployment rates and all sorts of other things in there. But in general, inflation and interest rates. Morning, night. From a perspective of obviously dollar strength or weakness, today we should see anticipated weakness in the US dollar. So continuation moves out of this propulsion gap. That's obviously where the news was released. We've come up and we've retested that area on the US dollar CAD. US dollar Swiss, same thing. We've had the big drop. We haven't got back up into the retest yet. And US dollar yen, obviously we haven't got up there either. But all the US indices have completely undone the move. So we know we're obviously in a bear market with all the indices at the minute. So a strong US dollar would mean negative indices. A weak US dollar would typically mean strong indices. And that's why we obviously got that spike up yesterday. So potentially moves to continue to the upside. And obviously that would mean potentially a Santa rally. we're looking potentially at a rally into Christmas. But it's very difficult to tell at the minute. We need to get the rates out the way first. But obviously the market took all the liquidity up at those highs. So we've been sitting range bound for over 2 weeks, as we know. Market didn't really have any direction. We didn't get the Santa rally started. Today, when we get those interest rates coming out of the Fed, this thing will then be free to run wherever it wants to, because all the main news that we've been waiting for the US dollar, for the market to determine whether it wants to be bullish or bearish over the next month to quarter, is out. So we need to basically get an idea of direction off the back of FOMC today. Where it goes, nobody knows, obviously. But with the figures that came out yesterday, we would expect potentially bearish moves off the US, which would be bullish for indices. So it will be interesting to see what we get there a bit later on. ADRs, we had lots of ADRs hit yesterday. Obviously, everything went absolutely crazy. There's nothing hit on the weekly, though, funnily enough, because a lot of the moves were undone. And RSIs, we've got a couple of 1 hours, nothing on the 4 hours either. So nothing's really sitting extended at the moment off the back of the moves. So, looking at all the US dollar pairs, obviously US dollar CAD came down, US dollar Swiss down, US dollar yen down. But look at the size of the day. It's not an abnormal day, is it? And we did pull off the lows. So I wouldn't say that news yesterday, the market was particularly impressed or unimpressed by it. It was a knee-jerk reaction. But today is the interest rate is the key thing. So we're not going to see really what's going on with it until today. Obviously, New Zealand, US dollar pushed off of it. All the others will have pushed off of it. Everything pushed basically. Because obviously the US dropped. So only extensions we've got. I'm not going to run through all the pairs today. It's going to be a fairly short one this morning. I'll look at anything you want to look at. So anybody wants anything, let me know, and I'll look at it. I'll have a look at Aussie CAD in a sec. There's not much point in running through everything again today, because everything is going to change on FOMC this evening, and obviously, you can't do any forecasts on the Aussie because the unemployment figures are coming out tomorrow. You can't forecast anything on the Swiss because the Swiss rates are coming out. You can't forecast the pound. You can't forecast the euro. We've got more US dollar news. So, all the major currencies, basically, there's just zero way of telling where anything is going to go this week. It'll go where it goes based on the fundamentals, and we don't know what any of these fundamentals are going to be yet. So, there's no point in looking at anything. It's going to go where it's going to go, isn't it? So, so that's basically, obviously, what the situation. Tomorrow is a massive day. We've got the Swiss rates at 8:30, followed by the press conference at 9. We've got the pound rates at 12. We've got the euro rates at 1:15, and then we go into retail sales at 1:30, and then just after retail sales, we've got the ECB press conference. You could literally toss a coin and press the button, long or short, whatever you want to do tomorrow. You've got a massive chance of making a fortune or losing a fortune, haven't you? So, just be very, very, very careful this week. We've then got all the PMIs for Europe, pound, and US on Friday. So, all of these figures also have a big impact. So we'll see what happens. But, just be careful. Low time frames, and be prepared for a lot of whipsawing. Don't forget this is the last month of the year, the last month of the quarter, and it's the end of the month coming up. This week is really the last full week of trading. Next week there'll be very light liquidity, so it's quite likely that markets put a lot of its movement in, and we're just going to get a load of whipsawing for the whole week, and the market's not really going to have any direction. And then Christmas, we're just going to sit until January. So, it's kind of over. But you never know. The Santa rally apparently meant to start on the 10th. We haven't really had it yet. So where's the 10th? Yeah, so we're on day 3 potentially of the Santa rally, aren't we? Really, and it's got a long way to go. It's got to get all the way back up there, which is a 200 and was it 175 ADR yesterday? Something like that. So, it's got to get all the way back up there. Yeah, that's going to take 2 or 3 days to get to, potentially, if it's going that way, that is. There's 500 pips on a 307 ADR. So, morning, Neo. Right, Aussie CAD. So the Aussies, basically, we obviously had a push yesterday. So all the Aussies, off the back of the news yesterday, had a push, which is great because I'm long Aussie New Zealand. So my break even is from here was 150. So I'm break even somewhere around there. I'm actually not getting out there. I'm getting out here. So they all moved up. The Aussies obviously had a very weak run recently, as we know. So it's not been particularly bullish. Against the CAD it has, obviously, because the CAD's been hideously weak. But, the Swissie's been beating it down. The New Zealand dollar, obviously, as we know, has been smashing it down. Aussie dollar, yen. We've been sideways because we've had strength and weakness on both of those. And obviously with the US dollar, just sideways because we've had the US dollar weakness. So with Aussie dollar CAD, you are obviously very, very, very extended. Just take that. So we're above the 80 level now, Aussie CAD. If you go and look back, and it's the same with a lot of these at the minute. We're up at levels we very rarely get to on daily charts. I don't look at the daily, as you know. I concentrate on the 4 hour. I do look at the daily, but I don't concentrate on the RSI on the daily because it's just so intermittent, the signals you get off of it. But every time we get up to these sorts of levels, you either get some kind of pullback or you get a reversal starting. So that was a fairly tight flag there. We had a nice pullback there, which was roughly 50% of the original move. Getting up to this level here, that's when we had the actual reversal starting. Again there, nice big drop. Where we are here, we're going to get this. So it's just a case of waiting. You've just got to sit through it at the moment. Worst case scenario, if you get a flag continuation, you'll get a good couple of 100 ADR. You'll get a couple of days where this thing will come down. If you go and look at the previous examples, where we've got to like very, very extended levels like that, what you do is you get a good 2 or 3 days. That's what I keep referring to as the elevator shaft. We climb up the stairs and fall down the elevator shaft. That's what you tend to get, and it's just a correction. It's an undoing, a profit take move on all of the long positions. So it's everybody basically exiting their long positions to take profit. Don't forget, we're end of month, end of year, end of quarter coming up. So it's very likely that we're going to get it coming in the next week or so. The issue we have at the moment is CAD with this particular pair. CAD is very, very, very weak. Oil is very, very, very weak. So we've got oil just starting to putting a bit of a recovery. So we've had 2 days where we've had some bullish movement. So obviously that's going to help CAD. But what really needs to help CAD is for oil to continue to rally. We need to see some continuation strength, which we obviously don't know if we're going to get. We've got a major resistance level coming up. Okay, in this propulsion gap here, and mind you, I would class all of this as a propulsion gap, really, that whole lot there. So we're sitting in this area now where either we're going to reject, which is like the 2472 rejection downside, or we're going to slam through it in that sort of fashion as we did previously. So that's going to need to help happen, really, basically, to help the CAD along. Aussie obviously has been weak, we know. Whether it's going to get any strength, I mean, the problem with the Aussie is we've got the unemployment figures coming out tomorrow morning. If they are positive, that's really going to help, obviously, with the Aussie moving up. If they're negative, obviously that's going to be detrimental to the Aussie. So you kind of want to pray for negative figures tomorrow. I want to pray for positive because I'm long Aussie New Zealand. But what would be the ideal is if Aussie New Zealand today can just rally and put in a 200% ADR move, I will get out of my Aussie New Zealands and then you can scale into some more Aussie CAD, and we can have the news come out negative and drop tomorrow. Then we both win. That's an ideal world. So yeah, Aussie New Zealand dollar obviously is on its way nicely in my direction. But yeah, so difficult to tell. We have taken out the highs, obviously, and rejected. So the high of the week is here. And all we did yesterday was slam through it and pull back. So this morning we've had a little push up. So potentially a pull down. And obviously the thing you've got going for you as well, or maybe not, is what happens with the US dollar this afternoon or this evening. So a bullish US will tend to pump the CAD, and a bearish US will tend to hinder the CAD. But the main driving force of the CAD is oil prices as well. So that you've got on your side for the Canadian dollar. Don't forget the Aussie New Zealand. When we're looking at currency pairs, as you can see, Aussie New Zealand coming down hard, Aussie dollar CAD flying up. Both can happen. Yeah, if we get a massive weakness on New Zealand dollar, this king could fly up. Yeah, while the Aussie dollar CAD is coming down hard because the Canadian dollar is rallying. So you have to look at each one on their individual merits. They're just because the Aussie is either strong or weak doesn't mean they're going to move the same. They're going to move independently based on the other currency that you're trading against. So hopefully that will work out. New Zealand CAD, I'm short on this still. I took some loss on this again yesterday up here. I had to scale out of some aggressive positions. I had some aggressive positions put on, hoping that we're going to get a drop. We didn't. I got stopped out on them, so I've lost about, I think it's about 8.5% on it this month so far, and I'm still in. So it's not looking like a good month. It's not a nasty month to finish on, December, after such a good year. Anyway, it's not over yet. So we've got plenty of potential drops on this as well, New Zealand dollar CAD. So this is obviously very, very similar to Aussie CAD. Again, we've taken out that high. We're dropping nicely this morning. A break of that low will open up the floodgates. If we can get the reversal alert on the 4 hour, we've just had the hourly this morning, which is lovely. Oh, no, we haven't. Sorry. No, we haven't. What did we have this morning? 15. No. I must have been looking at another pair. I'm sure there was an alert on it this morning. It was another pair, obviously. Maybe it was the Aussie CAD. I could have sworn we got a drop on one of those, but maybe obviously not. It was M5. Sorry, yeah, it was M5. I was scanning through this morning positions, and it was M5 because I was looking at it thinking that was a lovely M pattern we got yesterday. So I didn't, after I'd scaled out of this, I didn't dare take another position there. So as we come back into this accumulation, I'm going to get another position on there. But yeah, so yeah, all looking potentially good at the moment, isn't it? But we'll see. So RSIs this today to look at. The only thing we've got is Aussie New Zealand, which is very extended. RSIs on the hourly, and obviously I'm long on this, so this is what I'm worried about today, getting out here. So I may well probably take a little bit off up here and then wait for a pullback, because we keep tapping into these highs and rejecting. We do it a lot. We had the same thing here, didn't we? We just find that there's a glass ceiling on the Aussie sometimes, but the market structure is very nicely in now. So this is where I would say we need to target initially, and then obviously see what happens there. But that would be lovely if it can get there by Christmas. So that's what we've got on those. Gold, someone wanted to look at. Ravi, what's the outlook for gold? Can we buy for scalping? I don't know. If yes, at what price? I don't know. I don't trade gold, but it's the same as everything else. Gold will be bullish, assuming that we get as expected rates this evening. So yeah, buy gold. It depends on your strategy. Very possible. I mean, it's standard support and resistance, isn't it? Yeah, so got that level there. Hello. What? Okay. You got that level there, and you got where the move started. So we're either going to go from here, we're going to pull back and go. One of them. That's what I would be looking at today. If you want to build a position today, start there. This is obviously all well within ADR. And if we get back down into here, ready for FOMC to pump again on US dollar weakness. But you know, it's like scalping today. If anything hits ADR today, I shall be massively surprised if you get any movement today. Because obviously we've got FOMC. No one's in their right mind is going to speculatively enter large positions ahead of FOMC. I got stopped out. I went on pound US dollar short yesterday on FOMC. So I was short in here. I took this one yesterday morning, didn't I? In here, I took a short here, got down to there. I got stopped out on my position there. It pushed up again. I got another short on there, and I got stopped out on the interest rates. So you know, if you're long it, whatever, you know, you have literally a 50-50 shot at 7 o'clock this evening as whether you're going to make money or lose money. Can't tell. Intraday, you're going to get movement like this. Yeah, so that's what's going to happen on everything I would suggest today against the US dollar, potentially, because no one's going to want to take a speculative long or short because they don't know which way to go later. So short term, the algos will be playing. So obviously you can look on short term highs and lows. So I would be selling the highs of Asia and buying the lows of New York. But that's really all I would be interested in playing all day today. Unless they need to reach for liquidity ahead of FOMC, you know. But I fully expect the Fed to come out at 4.5 this evening, which I think the market will probably react negatively to for the US dollar, which will be obviously positive gold. But we don't know, do we? The trouble with rate releases, with interest rate releases, is you don't know how much of this is factored into the market. So your forecasts from when we get a rate announcement, so from when we get this, let's say this comes out at 4.5, what will happen now is the market will now wait for the press conference and wait to see what the Fed's anticipated moves are for the next rate announcement. So when they do the next rate announcement in January, we will be thinking, or they will drop hints as to, we will be slowing down interest rates. So what the market will read into that is, right, we weren't 4.75 this time, we were 4.5. If they're going to slow down rates, we're looking at a 0.25% increase in January. So if there's a 0.25% increase in January, that will likely slow down US dollar strength. So the market will start to short it. If he comes out in that and says, although we've seen inflation dropping and we have managed to keep interest rates at a 0.5% increase, we don't see a soft landing happening unless we increase rates until 5.5% by end of year, the market might look at that and go, right, well, we're probably going to go 0.5% next month. In which case, then they may well be slightly bullish US dollar. But the market will factor this movement in from now until January. So what's going to happen here is a spike. It's either going to be a whipsaw or a spike in one direction or the other. Whether that is the direction it's going to go, the analysts will need to work out. So you don't know, do you? You know, this is what I'm saying. Analyzing anything ahead of that number, that number, that number, and that number is just pointless, because where everything's going to go is going to be completely dependent on what happens with those numbers. and what the statements are. Yeah, this is these. Obviously, if you get a press conference, you get economic projections. This is basically an idea of where things are going to go. But we're not analysts. We let the market decide what to do there. So very tricky today, obviously. Yeah, short term, I'd be looking for buys on it at the moment, just because of that. Yeah. But obviously you've seen what's happened for the indices. Yeah, every chance that gold could come down today and completely fill the gap ahead of FOMC. So you could have a drop on it today. But that's a decision you've got to make. It doesn't matter, does it? You pick a direction. You go long or short, and you risk manage. Whether you're right or wrong is completely out of your control. So if you fancy a fade, short it, use risk management. If you fancy a long it, use risk management. It doesn't matter whether you're right or wrong. You haven't got a choice on that. The market decides whether you're right or wrong, doesn't it? So you just need to get in a direction. But at the moment, there's no setup anywhere. So I would take a break short or a break long, potentially, if you fancy a breakout. If you don't fancy a breakout, try and fade the range. I don't know. Nobody knows. But yeah, that's gold, really. That's all I can see on that. And obviously oil, we've got that nice move up that we got yesterday. So it's very difficult to tell where we're going to go from here as well with oil, but hopefully we'll get some bullish runs on that. There's always drops in gold. Careful, scalping works well sometimes. Yeah, everything works well sometimes and doesn't work well sometimes, doesn't it? It's called trading. Things go up, things go down. They move through time. They're the only constants we know about. There's always drops in gold. Again, that's another stating the obvious, isn't it? Yes, there is drops in gold. There's also rallies. There's rallies in gold, there's drops in gold. There's rallies in gold, there's drops in gold. There's rallies in gold, drops in gold. You're stating the obvious. You obviously haven't watched the Boocamp yet. It sounds really silly, but it is the only thing you know, right? Every single trader in the universe, whether it be me or whether it be Warren Buffett, knows two things. The markets go up and down and sideways through time. Those are the only three constants every trader in the world knows. There isn't one trader in the world that knows when it's going to do it and which direction it's going to go in. Not one. There isn't one person on this planet right now that can tell you where this is going. Everyone can have an opinion and speculate, but nobody knows. I'm long Aussie at the moment. Someone else in here is short Aussie at the moment. We can both be right and both bank an absolute fortune. Doesn't matter, does it? When the trades play out is the only thing that you need to manage. So right now, if you want to go short or long on that, you've got the same chance as anybody else. That's your odds. Every single time you press the button, there is only one odd, 50%. How you manage that position when you enter it is what makes you money. Whether you press long or short there hasn't got anything to do with anything. That's all we know. So, and that's where it, your risk comes into it. If you go short here and it goes up, you stop out there. If it goes down, you add another position there because you're right and you double your profits. It's as simple as that. It's going to go one of those ways, isn't it? It's either going to do that and then it's going to do that or that, but I haven't got a clue whether it's going to do it here or here. So stick an order there and hope that it does that or that. If it does that, you get stopped out. It really is that simple. There's two constants, up, down, and sideways, or direction and sideways. Direction and time, which is why position trading works so well, because you don't know which direction it's going and you don't know when it's going there. So why try and guess? You don't know. You've got the same chance as anybody else. So if you go long here and you've got a feeling it's going long because of what happened there and it comes down, go long there as well. And if it gets down to there, go long there as well. When it does go there, you make money. But you can't time when that's going to happen. And that's where everybody fails, because they're trying to time price movement. We can't time price movement because we don't have the ability to move it. The markets move it, the institutions move it, the 10 banks that run the entire market moves it. We don't know when they're going to press those buttons, do we? So there's no point trying to guess. You pick a level, you get in, and you hope. Close your eyes, hold on tight. That's what you can do. But you've got to have a strategy, obviously. So, right on gold now, just while we're talking about gold scalping, there is absolutely no directional bias on this. Yeah, we just had a reversal alert short followed by a reversal alert long. What does that tell you? The market's going sideways. If you've got a long bias, right now is a great time to buy it. If you've got a short bias, you missed it. But right now, we're just waiting for the market makers to press their buttons, and they might not do that till 7 o'clock. So I personally have got a long on gold at 1812, which is there. So I'm playing a retracement at the moment. So I'm looking for a 38 to 50 retracement long. But if it comes down into there and gets back down into here, then I'll be out, which is ADR. It's a long way. It's got to drop a long way to get me out today. It's got to do a whole ADR move to the downside. So, and I've also got a pound US dollar short on. Which I'm just about to stop out on. Above that high, by the looks of things. So I took a pound US dollar short. The reason for that was obviously news this morning. So we had negative news, and obviously CPI figures coming down. Obviously it's negative. So you obviously would expect the pounds to go up, wouldn't you? Not. This is what I mean. It's just nutsness. At the moment, it doesn't matter what the news does. It really doesn't. The market will do what the hell it likes because there's so many catalysts coming out this week. No one's interested really in going anywhere apart from what's going on with the US dollar, because US dollar is the world currency and we need to know what's going on with that before we do anything. So, right, so that's all I've really got for you this morning. There's not a lot else happening, and I don't foresee a massive amount happening today either. So obviously the Asian range, as you can see, for a lot of stuff has been very tight this morning. The London range, I suspect, will be fairly tight as well. We may get some movement into New York with market participants trying to position themselves ahead of FOMC. But I wouldn't expect a lot really today. And, we're going to get a lot of whipsaw, a lot of movement this week. But whether or not, if you jump up to your higher time frames, whether or not we actually get any movement on anything outside of ranges and moves starting, I don't know. I get the feeling we might just bounce around off of news, and that's really all we do. So really short time frames and trying to maybe grab some money off the news moves really is all you can really look at this week, I think. So I'm stopping, especially after this morning's debacle. But EA testing is going well on the plus side. So the new EA, obviously, I've done loads of set files on it. I'm running a test at the moment on moving averages, getting some very nice profit factors off of moving averages. Very nice. Testing different risk amounts. So this is using the 5, 10, 15, 20, 25 and 30 moving averages. So I'm doing tests on that at the minute. They're all coming out very nicely. So I've got lots of set files which are looking good at the moment, and they're all pretty profitable. Return on drawdown ratio is what I'm concentrating on rather than the profit factor, because that's more important, really. How much is it monetary going to draw down, and how much is it going to return me in respect of that? So you see on this is the 15-minute. Most of it is being done on the DAX at the moment. I've done a couple of Nasdaqs, which again, they look great. Got up to 5 return on drawdown on those, but the main ones are the pre-market breakout gets, there's loads of variations of that that get decent return on drawdowns. I've got some tight scalp with high return drawdown, some other tests, initial opening range breaks, just taking singles gives a good return on drawdown as well. And these are the moving average return on drawdowns, which are also pretty good. So everything, all testing is getting great results. Jamie, I just purchased the new EA. Are the set files available? I would like to do some back testing over Christmas. Well, you can do your own back testing. Just stick it in the strategy. That's all I'm doing. Sticking it in strategy tester and test. So I'm just doing at the minute. All my initial testing at the moment is just being done on 1 year. As you can see, it takes a long time. I'm doing tick level on tick data over 1 year, with lots of variations. So I'm just getting it all done properly once. But each test takes anything from sort of 12 hours to 36 hours. But I mean, I can produce some set files, but I mean, there's 4,800 set files here. That's not right. Oh yeah, sorry, that's the one that's running at the moment. It's not complete yet. But for example, that one. There's 1,300 set files to choose from. 1,166 of the 1,300 are profitable. Which one do you want? This is the trouble. All of these set files have different profit factors. I'm concentrating obviously on the high return on drawdowns, but I want to make sure that there's good confluence between all the settings, basically. So using a fixed stop of 250 to 500, using trailer distances of, these are 750 to 1,000, using break-even distances of, that's what varies a lot. Adding to trades distance fairly quick seems the best. So any of these you could pick, and they will all return you at least a 2-to-1, pretty much. So I can put some set files out there, but yeah, as Diamond just said, there aren't many settings. It's easy enough to configure in backtesting. The thing you've got to watch out for, which has caught me out this morning, and you just saw it live on stream this morning, and it cost me dearly, is that every broker has different inputs. That is the key issue. So this is E8, and they work in thousands. Robo Forex work in hundreds. Other brokers will work in double digits. So before you put this on any live account, test it in a strategy tester. So any set files I publish, all these set files are produced on Robo Forex. So on Robo Forex, a 25-point stop on the DAX is 250. On E8, the 25-point stop on the DAX is 2,500. Yeah. So if you put this on and it gives you nutty results and goes massively into loss, it's because you need another digit added or removed. So be careful with that. So yeah, just you need to do your own testing. Morning, Seymour. By the way, do you trade futures and mini futures? Yeah. Yes. Not as much though. I've got a funded account with Take Profit Trader for futures. Well, I find futures very hit and miss because it's all scalping. I've said in here before, everybody I know that is a profitable trader without fail is trading the H1, H4 plus timeframes. I know very, very few people that make a living on M5 scalping. It's great for making quick hits, quick runs, nice big profits every now and again. But I don't know anybody that's consistent. No one. I know a couple of people that are consistent. 99.999% of everybody I know that tries to scalp loses money long term. Which ones are your favorites? I trade NASDAQ and Dow. I don't trade any other futures. So yeah, so I've got loads of. I mean, I can publish some set files, and this is why I'm doing all this testing to publish some set files. But the other thing you've got to bear in mind is I'm using tick data here. So this is Dukascopy tick data. The other thing you need to bear in mind is your broker's data may be slightly different. The reason I use Dukascopy is because it is very high quality tick data, and they use UTC plus 2, which is what most brokers use. Most brokers use is UTC plus 2 time frame. So 9 a.m. In Frankfurt is 10 a.m. in the UK, etc., etc. So, but you may get slightly different broker data. So if you're testing this on normal broker data, first of all, you're not going to get the 99.9% accuracy that I get. And secondly, it might be slightly different data. So you've got to do your own back testing with anything. So I will publish some set files. So I'll publish one that uses moving averages. I'll publish one that just takes single opening range breaks. You can see the differences. I'll publish one that there's one I've got that targets individual TPs. Or have I done? I haven't done that one yet. Oh yeah, this one. So this one targets individual TPs. This one uses very, 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 very tight stops. And as you can see, gives nice return on drawdowns. So this one will scalp you. You'll have loads and loads of break evens. This one trades pre-market breakouts instead of the 5-minute opening range breakouts. So this works well as well. You know, it's just another strategy. It's still a breakout strategy using momentum, but it trades before. This is using standard trailing stops. Again, these have all got return on drawdowns. So yeah, I can publish, but I've only really got DAX done in any detail. As you can see, I've got to do all this testing again for the Dow, then I've got to do it all again for the NASDAQ. So I'll publish some DAX ones, but you know, I'll publish one and you can use it and I'll explain how it works, what it's doing, and why it works. But I don't know whether it's going to be right for you to be using. So, you know, this one, for example, the moving average one, this is a strike rate of in the region of 18 to 25%. So only 1 in 5 trades will actually work. The 1 in 5 that works is going to return you somewhere between 5 to 10% profit on your account. The others that don't work will be either breaking even or losing you money. And they may well do that for a period of 3 to 4 weeks. So this is a home run strategy. This returns a 2.74 return on drawdown over a year. But you will only have maybe 10 or 12 home runs a year. You might only have 1 trade a month that works, but that one that works is going to pay you, right? So if you're running a 250k account, that trade that works is going to make you 10 to 15k a month. But I don't know if that's right for you. So you might want to go, I want to use a tight one where I'm making lots and lots of small gains very regularly. But again, you're going to have drawdown for weeks. And this is why the drawdown is so important. This is why this is the figure to concentrate on. Return on drawdown is the most important thing, because this figure will be the same regardless what size account you put it on. Because if you just change your risk, so this is a $500 risk. So with a $500 risk, it takes 500 trades with that set file and makes 2,500 drawdown, but it only returns 8 grand. So if you want to use this on a 250K account where you've got $20,000 worth of drawdown, you can multiply that drawdown by 10. So you need to multiply that by 10. So you need to be risking 5 grand a trade, not 500 a trade. And that will return you 80,000 a year because you multiply that by 10. So the drawdown percentage, you can kind of forget that, because this is the figure that's important. If you're trading prop, this is what's important to you. These are just for 1 year, these results. Again, this all needs to be backtested over longer periods. But the problem with backtesting over longer periods is it takes longer. You know, this thing at the moment I'm running here, right? I'm running 3,200 simulations, which is going to take me 23 hours over 1 year. If I'm going to run this over 4 years, this is going to take me 92 hours, 3.8 days. This is one test at tick level. If I run that over 4 years, it's going to take 4 days. It's roughly a day a year is what I'm finding, depending on obviously the size of the test. Some of the tests I've run though, obviously a lot quicker. So these ones here, this is only 400 passes instead of 3,200, which is what I'm doing on this one here. It's actually 4,800 because I had to stop the test when it had run through all the 5 MAs. So I'm running the 10 MAs. But yeah, so it all depends on your on the number of tests that you're running. So this one here, for example, only ran 100 tests, but it passed 100 tests. Every single version passed. That's enough for me. I'm only testing trailer distance and break-even distance. They're the only 2 variables that changed, which is why this one ran really quick. So you can run tests a lot faster, but you've got to run them with less inputs. The more inputs you have, like this one is testing 1, 2, 3, 4, 5, 6, 7 inputs. So it's testing every single possible combination of 7 different inputs with multiple variables on each. That's why it's running 4,800 passes. So it's 4,800 years worth of testing being done. It's not quick. People, you know, there's ways and means of testing strategies, but testing them robustly takes time. So yeah, this is just 1 year testing, but 1 year testing is your initial benchmark to say, right, what's the best thing to use? Should I be using a fixed stop of 100, 200, 1,000, or what? And your initial 1 year backtesting will tell you that the vast majority of the high return drawdowns are all using 1 to 200 pip stops. So therefore on the DAX, that is your optimal. Now we need to test this over a longer period of time. And it's saying you're better off just taking the 10-minute opening range break initially, rather than taking multiple breaks. Yeah, with that stop. You need to move your break even. Your break even doesn't matter here. So this variable is unused. Why? Because you're using a 100 pip stop. So whether you've got a break even at 200, 400, or 1,000 makes very little difference because you're only risking 100 anyway. So the chances are you'll be taken out by the 5 moving average before you even get to break even. So it either hits that or it works and it gets you out there. So that is kind of irrelevant, but it does become relevant when you start using wider stops. So if I'm using a 400 pip stop, now break even is important, because if I've got a 400 pip stop and it moves up by 200 pips, I'm moving to break even with that. So that now is a relevant metric. So we need to test all of this, whether it's irrelevant, it will never be used or not. At some point during the testing, it will, because these figures are all going to change. What's the best risk to use based on your stop to give you the return you want and to limit your drawdown? Again, all this stuff is being tested. So if you're running on a 50k account and you've got a maximum 5k drawdown, that will work. If you're running on a 20k account, you can run exactly the same settings here, but you could go with an $800 risk instead of a $200 risk, and that will return you 50k a year off of a 250k. So it's a 25% return on investment. Most people would snap your arm off for 50k a year, wouldn't they? Especially in today's climate. Multiply that on 4 different prop firms account. Now you're making 200 grand a year. That's one set file, one setting. Don't forget you can run all of these on the same account. At the moment, I'm running that one and this one, which is the moving average and the 15-minute pre. So that's basically when the market opens, we take the first 3 candles and that becomes our opening range. And then the first 5-minute candle, we take a trade immediately on that first 5-minute candle. This one waits for the 15-minute opening range and then takes a break of that. So they're 2 completely different strategies. This one trails on a moving average. This one doesn't. Again, totally different strategies, but both of them return very good results. So, I'll be getting somewhere around about 2.5 plus return on drawdown on that strategy. That one will be returning me somewhere between 2 to 3. So in total, it's 5R return on a 250k account. That's very nice. Is DAX preferable? No, NASDAQ is. I haven't tested, but it's time, But no, NASDAQ I think is the best instrument for trading opening range breakouts from my testing so far. So they all work. Yeah, it doesn't matter which you use, which instrument you use. DAX, Dow, NASDAQ, they're the main 3. FTSE I haven't tested, S&P I haven't tested. You don't need to test them all. Well, you do need to test them all if you're going to run them, but obviously I haven't tested them because I don't trade them. But if you look at this here, so this is the NASDAQ PM fixed, which is the equivalent of the DAX AM fixed and the Dow PM fixed. So the DAX AM fixed will give you a maximum 2.8 return on drawdown. The NASDAQ will give you 5 return on drawdown. The Dow will give you 3 return on drawdown. So the Dow and the NASDAQ, the Dow and the DAX are very similar because they're very similar movement stock indices. They've got 40 stocks and 30 stocks in. So they tend to be slower and more ploddy. And they suit trend breakout strategies very well. They're good for sort of break evens and not moving your stock to break even quickly. The NASDAQ, however, is 100 stocks. Obviously, it's much more violent in its movement. We know it's way faster. So what you tend to do, and this is why it gives a much better return on drawdown, is when these breaks actually work, they work fast. So your profit return is much quicker. Your risk is always the same, but your potential return when you get a fast break on the NAS is so much better than on the DAX and the Dow. So you can see the profit, the return on drawdown, this is just 50 runs of the strategy, but that's between 3 and 5. The Dow is between 2 and 3, and the DAX is between 1.6 and 2.8. So the DAX is actually the worst return, which is kind of why I'm thrashing it to death first, because what you should be able to do then when I find out which strategies, they all work, every strategy works, but which one I prefer personally, I will then be able to quickly do the back testing there. So, DAX 515 tight gives you 3.32 return on drawdown there. NAS, the same equivalent, only gives 2.25 because the NASDAQ doesn't suit a tight stop. This is using tiny trailers, 12-point trailers and 7-point trailers, 5-point break evens. Absolutely. So what this is designed to do is it establishes the opening range, yeah, and then as soon as you break, yeah, and it's moved into profit, that one candle, it either break evens almost immediately, or it puts a very tight stop on it. So what you find with this type of strategy is your equity curve will be very much like that, very grindy, but it won't return a huge return on drawdown, but it'll be regular. So this what I'm looking for is a strategy that has a fairly decent equity curve. That what you can do is you can double or quadruple the risk to pass evaluations with. Yes, there's a high probability you might blow it, but that's to pass. Then when you've passed, you put the higher return on drawdown versions on, which will give you the bigger returns, but you will also have a lot of stagnation in them. Or use both, or use all. You know, there's, as I say, there's no right or wrong. Every single one of these, you know, say with the testing, look, the DAX, this one here has 1,300 runs. That's got 600 profitable. So that's the Dow DAX. There we are. 1,300 runs, 1,200 profitable. This one had 100 runs, 100 profitable. This one was 1,200 runs, 800 profitable. This one's 100 runs, 198 profitable. This ran 268 runs, 184 profitable. You know, you get the point. 400 runs, 284 profitable. The vast majority of all this robustness testing brings a profit. So you just need to decide what your favorite sort of strategies are. But there's a lot of stagnation with this type of strategy. It's a breakout strategy. All breakout strategies have got very low strike rates. All trend and breakout strategies typically will have somewhere between a 20 to a 35% strike rate. You'll very rarely find a successful trend strategy out there that has anything more than a 30% strike rate. They're not designed to work regularly. They're designed to work with high return. Those are your big risk rewards. They're your runners, aren't they? So you're going to get weeks where this thing will just not make money. It might lose money. You'll have months where it will just gradually draw down and not make a lot of money. But when it makes those home runs, you got to let it run. You know. But that's what it is. It's there to make money long term. I'm not looking for a high strike. I'm looking for a return on my investment. I'm looking to get paid. When you measure distance on your chart with a crosshair, it shows you how many digits your broker uses. Yeah, exactly. So yeah, on E8, so this opening candle on the DAX, for example, here. So on the DAX here on Robo Forex, that is 330, roughly 330. Yeah, that's what you put in the EA. On E8, that candle is 3,700. Yeah, so it's just got another digit on the end. So you need to determine that. And obviously that's what goes in these inputs. So if I provide you with one that says TP50, you basically stick this in the EA, and what you will find is it will place an order and a stop loss will be there, and you'll be like, that's just ridiculous. That's just going to get hit immediately. That's because that should not be 50. It should be 500 in your broker. Yeah, give it room. It's got to have some room to move, isn't it? So yeah, and then just add a digit on the end, or take one off, depending on your broker. The Nifty, I wonder. Yeah, could test it on the Nifty. Basically, the idea behind the opening range breakout is we need, it can be any instrument you like, but the instrument has to have a time of day where volume increases at an open. We need an open. So if the Nifty has an open every day where it suddenly goes every day, same time, without fail, as clockwork, it goes, you can use it. Forex, not as much. Because Forex, we don't have a time of day, do we? Where Forex, you look at Forex, it doesn't have a time. I have on here an opening time for when London starts roughly, but London doesn't start its move at 8 a.m. or 9 a.m. or 8:30 a.m. It starts its move when the guy's sitting down, has eaten his breakfast, had his coffee, and executes that first position to make the market. We don't know when he's going to do it, and he doesn't do it at the same time. Sometimes we have the opening volatility happen in Asia, at the end of Asia. So you can't time it. But with all indices, on the dot, on the dot, 10 a.m. broker time, 8 a.m. for me, that thing moves every day. And the NASDAQ, same. Yeah, the NASDAQ will move at 2:30 broker time for me, or 14:30 broker time for me. And I put in the blog post as well. If you want to know when it is, it's very, very easy to find it. It's very easy. All you do is you turn your volumes on. Yeah. You can play. Let's play Spot the New York Open. Yeah. Oh, sorry, that's the Frankfurt Open. Let's spot the New York Open. Yeah, actually, no, you can't play Spot the New York Open yesterday because we had 1:30 news, didn't we? There we go. So, okay, that's your New York Open. You can tell. It's totally obvious when it is. And in this particular case here, we've got high volume on this candle, which is that one there, which is actually 16.25. Everybody knows the market opens at 1/2 past. So although there was pre-market volume there, that's the opening candle. So this is your opening range there. Then we had a break to the downside, break to the upside, break to the downside, horrible whipsaw day, and then we rallied at end of day. So, and this is kind of why I'm not trading at the moment, because we're getting a lot of these days at the minute. 10-year government bonds, they have good timely movement. I don't know. Yeah, I don't trade bonds. But yeah, if they have a time where the market opens for bonds, yeah, you can trade those. Again, test it. Just test it. Stick the strategy tester in there. And the way to do it is to do it visual. So what you do is, I don't know if I haven't got the EA in here on this account because it's running on the VPS. But all you do is you just basically run a test and watch it in visual mode, and watch it trade. And see it drawing in the opening ranges, and then what I did initially to test this on the DAX was I let the EA run visually, and then I went back, and I let it run for about 10 days or so, and I went back and I measured roughly what the opening ranges were, and I was like, okay, well, each opening range varies from something like 300 to 900. So I thought I'll start off with a range of 200 to 1,000 pips as a stop loss. Yeah. So, and using a fixed stop here, you can see this has all got a fixed stop of 400 on this one. That's what I found actually to be the absolute sweet spot on the DAX. It's a 40-point stop. But when you're testing different stop losses, you'll see mine will all range from 100 to 1,000, because if you're not going to use the opposite end of the range, because obviously the EA has the option to use opposite end of range as the stop. So when you take your trades, you go long there and your stop is there, or you go short there and your stop is there. So that's the default. Trouble with that is when you get a massive one like that, and it does that, it's just your risk is so tiny because your stop is so wide. So I've actually found using a fixed stop is way more productive and makes better returns than using opposite side of range. But again, this is all through testing. That's how you find these things out. but you very rarely need a stop. Anything from 100 to 1,000 pips or 10 points to 100 points is the max. But I've found 40 is kind of ideal most of the time. But yeah, you just got to test it. You don't know what it'll be on the 10-year bonds. You might need to use two, a 3, a 4, and a 5. I don't know. I haven't got a clue, but that's what the back test is for, isn't it? Test it. And run it visually. That's the best thing to do. Run it visually. And when you see it running, you can see what it's doing. You know roughly where you want to set your parameters when you're doing your back testing. But when I've got this one finished, which, as I say, is going to be today, but it's not going to be today. It's going to be tomorrow. But what I'll do is I'll let this run all morning, and then I'll grab these results out, and I'll pick one and post it, and just say this is an example of a strategy running a fixed amount, and what this is doing, and basically what it's doing, and what the inputs are, and that will give everybody a bit more idea, won't it? But the strategy tester, all you do with the strategy tester, you probably all know, is you click optimization, and then on your inputs, you just check the ones that you want it to test, and you set the parameters. So, if I want to test a fixed lot size of 0.1 to 0.10 in 1 pip increments, that will run 10 combinations of this EA. So if I hit the button, let's do it on open prices, just so it's quick. That will run 10 simulations, basically. It's going to take a while, that probably, but I'm testing it over an absolute age as well. But yeah, you'll see it come up, the same as it does there. It'll come up and it'll tell you how many runs it's going to do. But you can do all this yourself. Go and test it. First thing to do as well is test it on open prices, and that will give you a rough idea of how it will perform. But you'll find if you've got very tight stops, open prices will actually give you way better figures than you're actually going to get. I've got some open pricing tests here. So this is the moving average open prices. You can see the return on drawdowns go up to 7.43. The actual tick levels only got to 2.74. So this will give you way, way, way out returns. That's 3.44 on open prices, but when you actually run them, you get totally different results. But it gives you a rough idea as to whether or not you want to be using 100, 500. It'll give you how many of that are profitable. But you can run loads of it. I mean, run 12,000 simulations here. That took less than an hour. 7,500 profitable out of 12,000, so roughly half of them. But you can't use these results because they're just open prices, and open price testing doesn't give you accurate results, unfortunately. But anyway, you know how to test. Right, that's all I've got really today. Not a lot else to talk about, is there? Market doesn't seem to be doing an awful lot, as you can see. I'll just turn the volumes off because that's annoying and useless. So DAX is literally just kind of fallen out of the low. You can tell how weak it is today. Look at the wicks. We've got a huge wicky nastiness. It's just not conducive to trading today. But yeah, potential gap fills on the US today. See what we do with them. Over there. Yeah, so US dollar CAD's coming down a little bit. Not got up into the gap fill. So I think that it looks like it wants to stay weak today, doesn't it? But as I say, there's nothing much we can do until later. So, But I'll post in the Telegram group. So come in the Telegram group if you're interested in the EA set files. I will post. I'm going to put a blog post together with them. But I'm just going to post some DAX first because that's all the testing I've really got done in detail. But go and do your own testing. Don't rely on my testing. You need to verify it all yourself as well in your own broker. But then again, you can't believe your broker data because your broker data is not normally very good. As we know, Mr. Gappy the broker. And the other thing you've got to pay attention to as well, just quickly before I go, is pre-market data. So some brokers you'll get pre-market data and some brokers you won't. So you can see here on Robo Forex, I only get 1 hour of DAX data before the market opens. On E8, I get 8 hours of data, but the market's shut, so I don't quite know where it gets it from. It's all speculative, but that won't affect the opening range breakout EA because obviously it's only concentrating on either the first 15 minutes or the actual open. So anything that's happened overnight has got nothing to do with the EA anyway, so it really doesn't affect it. This is my scalp week and we're horizontal today after yesterday's move. Yeah. I've given up totally, Seymour, this now. I'm off. It's just not worth it. Look at the news this week. Yeah, obviously we know before major news events, the market goes into accumulation and range. It doesn't want to do anything because it doesn't know where to go. It needs to know where to go after the news. So, just look at this week. Nothing's going to move ahead of FOMC, really. It's probably going to be range bound. We've got New Zealand dollar GDP. We've then got the Oz unemployment. We've got the Swiss rates. We've got the pound rates. We've got the euro rates. We've got retail sales. We've got the press conference. We've got retail for the pound. We've got the PMIs. Every single session, even multiple times a session, we've got news coming out. The market's just not going to be interested until it sees what's going on. And the trouble with this is, obviously, you sit there sideways until that, and you only get that one move. And if you're not on it and you don't get it right, that's it. You're done until the next one. It just then goes and does that. And we're like that. Oh, no, undone it. Nope, no, let's go back down there. No, the pound's changed. Oh, euro's moving. It's just horrible. Nasty thing to trade this week. I don't remember them doing it this way before. I don't remember having all of our rates coming out just before Christmas. I might be wrong. Yeah, no, it did. It did it last year. It does do it. I don't know. I think the problem is because usually I don't scalp. I've only been scalping really this year. So I've never really paid attention to the rates at Christmas because just never paid attention. But I guess that's why the Santa rally starts this week, isn't it? So it's not really a Santa rally, it's just US dollar volatility. That's what we're really trading, isn't it? The Santa rally. The Santa rally is really just the US dollar crashing every Christmas. We need crazy momentum from Putin or Musk. Yeah, we need those guys to say something. German GDP shrinkage, that's negative euro. ISA raises oil demand. Right, so some oil news coming this morning. Obviously, they are raising the growth estimates for demand. So demand for oil is going up, supply is constricted. That means prices increase. Yeah, so we've got restricted Russian supply. We've got demand increasing, I assume because China's opening, which will be a massive help. Which whenever you have a limited demand and increasing supply, you have price increase because they can charge more for it. So that's positive oil. So we'll see if we got any movement off of that this morning. Again, not interested in moving until we've got the rates. Because obviously the thing you got to think about as well with oil is even if we get positive news on oil, and this evening as well, don't forget as well, 3:30 this afternoon, we've got the crude oil inventories at 3:30 every Wednesday. The actual monetary amount that is charged for oil is in dollars. So again, no one's going to want to speculatively enter any large futures contracts until they know whether the dollar's likely to go up or down over the next quarter. We're not going to know that till this evening either. So you'll get a load of movement off of oil probably this evening in FOMC, because when they know what direction the US dollar is likely to go in, oil purchase will start. So I would imagine we'll probably get a burst on oil this evening as well. But, yeah. You scalp 1 minute pound US dollar. Oof, you're brave. Don't go down to 1 minute charts. You literally, excuse me, are just trading complete chop and volatility and algorithmic movement there. But I know a lot of people do trade M1, but I can't. I've tried. I overtrade M1. I just totally overtrade. That's because my brain is constantly seeing bullish and bearish engulfings all over the place, and they mean absolutely nothing. But I mean, that movement there, yeah, you got a bear signal there, you got a bull signal there, you got a bear short there, you got a bull signal there, you got a bear signal there. It's a nice rejection. 2 long wicks there. I'd take that as a bull signal. Just lost 5 trades basically. Because I trade price action, and the more price action you have, the more signals you have, the more trades you take, the more you overtrade, the more you get it wrong. So if I'd have been using my indicator and just taken a reversal alert, I'd be in a nice long and I'd still be in it. But yeah, I don't know. I can't do M1. Too hectic for me. Right, I'll leave it there, guys. So there's not going to be an awful lot. This week is kind of petering out for me. So I will be back every morning. Obviously, I'll be back tomorrow morning. We'll have a look at the what's happened, analyze the FOMC fallout, and have a look at all of this that we've got for tomorrow. And then Friday, we'll analyze all of this and have a look at what we've got there. And then Friday's the last live room before Christmas, and I'll be back after Christmas. So, and then I'll start trading again second week of Jan, because there's no point over Christmas unless you're really brave. And again, I'm not that brave. I like my money in my bank. Right, I'll be back tomorrow morning 7:50. Anything you need, come in the live room. I will try and get those set files done and produced. I'll start on some of them this morning actually, because I've got all that I can do. So I'll get all of these produced. I'll get them screenshotted and explain what they're doing, and then I'll put them up. And yeah, you can use those as starters really. I might get Signal set up as well. Actually, I might get a couple of demo accounts set up so that it can start, live trading a Signal, so that people can see Signal for the EA as well. But I'll just do it on demo, because obviously this is designed really for prop, and if I do it on my prop account, that changes regularly. So, okay, I'll leave it there. Anything you need, come in the Telegram group. Otherwise, have a good day. Hopefully, we get some movement and you can trade it. If not, hopefully have a good FOMC, fingers crossed, and I'll see you tomorrow. Have a good one.